How's this for a post from Gary Black over on X? Let's be honest. Oh, I like honesty. Most Wall Street analysts are used to being spoon-fed. Damn, dude. I mean, he's right. And he said it. This is amazing. And most CEOs hate providing guidance, aka spoon-feeding. They do it because their competitors do it. Interesting observation. Gary pointing out the herd mentality even among CEOs. Spoon-feeding analysts on Wall Street. Why? Well, everyone else spoon-feeds them as well. Tesla not providing guidance just means Wall Street has to do its own research, which is how it should be anyway. Round of applause, Gary Black, spitting some fucking facts, my dude. I agree. I mean, you guys might have heard me say this quadrillions of times. Literally using the term about Wall Street needing to be spoon-fed. I'm not sure what the group term, like the collective term is for a group of pussies, but that is in essence Wall Street analysts. Please tell us the number to stick in our spreadsheet so we'll know if you missed or beat at the end of the quarter, please. Thank you. The whole mentality among folks on Wall Street, analysts here, wanting companies to provide guidance instead of doing their own thinking, just makes no sense. The pussification of these analysts. I mean, hello. Think for yourself. Figure out what you think is possible and likely. Don't ask the company to tell you. I mean, Gary's totally right. Literally, Wall Street analysts are used to being spoon-fed. Please tell me all the numbers to stick in my spreadsheet ahead of time so I don't have to think. Thank you. And now, this is where it gets really good. Yes, it gets even better. Elon Musk is wired differently than most CEOs. Can confirm, and also you could replace CEO with human. And wait for it, there's more. Gary then goes on to state Tesla's mission. This is amazing. Tesla's mission is to accelerate the world's transition to sustainable energy. Providing Wall Street guidance doesn't further that mission in any way. My God, the dude is speaking my language. I mean, this is amazing. By the way, love you, Gary. Tesla's Q4 results were actually better than Wall Street expected, stripping out accounting adjustments and non-cash tax rate changes going forward. Gross margins, excluding regulatory credits, grew quarter over quarter to 17.2%, as automotive cost of goods sold per unit fell 8.5% year over year, supporting the thesis that auto gross margins bottomed in Q3 at 16.3%. Last night, Tesla declined to cut prices on a Thursday, which is when 90% of Tesla price changes occur. Recall Elon's comment on the earnings call that, quote, if interest rates come down quickly, I think margins will be good. Well, hang on, but I thought if Tesla advertised aggressively, then margins would be good. By the way, I am trolling, but not Gary specifically, just the folks who seem not to see the connection between interest rates and consumer interest and or ability to purchase vehicles. As one of my clients suggested yesterday, it may also mean that going forward, Elon is willing to sacrifice short-term volume growth for profitability. As Tesla learned in 2023, cutting price doesn't necessarily lead to more volume. What we saw Wednesday night was Elon saying, go fuck yourself to Wall Street. With the former CFO gone, Elon likely said, let's stop this silly custom of providing annual volume guidance to Wall Street at the beginning of the year, which we are then beholden to for the rest of the year. I'm actually good with that. And by the way, jumping in here, that makes two of us. Now, just to be clear, I think when you're a company with extremely aggressive goals, it's extremely counterproductive to provide guidance to Wall Street analysts. Let me explain why. You have an internal goal, which is absurd, to push your team to stretch. You can't say that out loud because it's extremely unlikely you get there, then everyone's disappointed. But then if you go on an earnings call and say a much lower number, all the people who work at your company are like, bro, you're telling us this, but what are you aiming for? Oh, that's more realistic, let's just aim for that. It's a total clusterfuck psychologically that you don't want. Unless you're a slow-growing company that isn't ambitious and doesn't have stretch goals, in which case, go for your life. I'm actually good with that, as am I. As an analyst, my job is to figure out the intersection of volume and price and forecast the stock price accordingly. It's not written down anywhere that CEOs have to guide anything about the coming year. Imagine that. Tesla investors and or gamblers had a fit yesterday because they are used to being spoon-fed the company's outlook. And now they have to do their own research. We all need to grow up. Another round of applause from Gary. Absolutely nailing it. What a legend. I could not agree more. I firmly believe that whether or not you're an analyst or an investor, your job is to use your brain and your balls, aka some courage, to do your thinking and draw your conclusions about the future of the company, different outcomes, their probability, and the financial implications. This is an all-time post from Gary Black. Really could not agree more. Of note, a few days ago, I actually saw Gary asking for some examples of people's Tesla bot valuation models here on X, which is a good sign. Would have been a great opportunity to plug my own. Link in the description if you guys want to join Patreon at the investor level and above and see it, but it's a very simple model. Here's how it works. Number of bots times how much they're sold for, which you could probably ignore. I'll get to that in a moment. Times how much people pay per month for the software enabling capabilities on the bot. Plus, over time, how many existing bots in Tesla's fleet. It's not just bots sold that year, but the size of Tesla's bot fleet. Bot fleet times how much people pay per month for software equals insane amounts of money. It's that simple. Now, regarding the actual hardware cost of the bot, it's not like Tesla can make them for free, but it is possible that rather than selling the bot for an upfront hardware cost, Tesla could just lease them for a flat monthly fee. And depending on capabilities, you get the full suite or very specific capabilities. There might be a manufacturing version where you pay a few $100s a month just for manufacturing related tasks and capabilities. There might be alternative for housekeeper / nanny / chef at home, those kind of things. I don't know exactly how it's going to work, but at its core, very simple back of the napkin way to value Tesla's bot is bot fleet times how much on average people pay per month for software on their bot. That's it. 2 numbers. The opportunity is colossal. So good on Gary here. We don't always agree on everything, but I do respect Gary, and I think this is one of his better posts on X ever. Breaking news. Tesla will spend $500 million on Super Bowl ads to... Oh, hang on. I misread that. Let's try again. Tesla will invest $500 million to install a Dojo supercomputer in Buffalo, New York, according to New York State Governor Kathy Hochul. I probably butchered that last name. It will process millions of terabytes of data from its EVs to improve the safety and engineering of FSD. So let's see the short clip.
Starting. It's not just with this supercomputer. I'm also proud to announce that Tesla is investing $500 million to build their next supercomputer right here in Buffalo. How about that? 2 supercomputers for one community. And this is going to continue this cycle of possibility. I mean, people think about Silicon Valley. A few businesses went there in the 60s. They exploded in the 80s. It took 2 decades, but all of a sudden they became known as the place that people wanted to go. The young, brilliant minds all wanted to go to Silicon Valley and be the next innovator, come up with the next great thing, the great technologies. That place, my friends, is now New York State. And that computer will be housed here, but it'll power innovation ideas and people all over the state of New York. So
obviously, it's very important as a Tesla investor to completely ignore this because Tesla is just a car company. And so I don't even know why they would be spending $500 million on training compute in Buffalo, New York. I guess it's clear proof that Elon Musk doesn't know what he's doing, and maybe I should join the Tesla board and oust him. Ahem.
All right, good evening here. Good afternoon out west. I am Brian Sullivan. We begin tonight with some breaking news. Tesla investors are losing a little bit of money right now. Stock is down. Tesla tonight warning that this year's sales growth will be less than it was last year. Some big money investors, they may have anticipated this news. Tesla's down 16% so far this year, but as always, context is key. Investors nearly doubled their money in Tesla last year.
Good news, bad news in terms of the fourth quarter, and not such great news in terms of the outlook. Let's start first off with the fourth quarter. It was a miss on the top and the bottom line, not by a lot. 71 cents a share earnings versus 74 cents a share earnings estimate. The gross auto margins, now this is the good news last quarter. They improved, went up to 17.1%. The street was expecting 15.7%. By the way, that's an improvement, 17.1 versus 16.3 in the third quarter. But the outlook for 2024 deliveries, they didn't give a guidance. They didn't give us a number. They simply said notably lower. Why?
Because they're not currently ramping up stage 1 of any new factories, whereas last year, Berlin stage 1 was ramping, Austin stage 1 was ramping. Surprise!
Because they are transitioning and preparing to ramp up next generation vehicle production, starting at their Gigafactory in Texas. Here's Elon Musk a short time ago.
The first manufacturing location for this will be at our Gigafactory and headquarters in Austin, Texas. And then we'll follow that up with other locations around the world. Probably the factory we'll build in Mexico will be second, and then we'll be looking to identify a third location, perhaps by the end of this year or early next, outside of North America.
That is where the next generation vehicle will be built. And by the way, he thinks they might be able to begin production. It's scheduled to start second half of 25. Keep in mind that that's just a projection at this point. This is the other thing that spooks investors right now. They delivered 1.8 million vehicles last year. The street was expecting them to give guidance of at least delivering 2.1 million vehicles. There was no guidance given.
Oh my God. What do we do? There was no guidance. Oh shit. What do we do? Fuck. I can't put nothing in my spreadsheet. There's a cell that's empty now. Fuck. What do I do? Panic sell.
They end the year 2023 as the number one EV automaker in the world. They are number one in EVs, but that crown is starting to erode a little bit. Why? Because you've got Chinese automakers, in particular BYD, nipping at their heels. BYD, by the way, topped Tesla in the fourth quarter, not for the entire year, but in the fourth quarter. And Elon was asked about the growth of Chinese automakers and their growth around the world. Here's what he had to say.
The Chinese car companies are the most competitive car companies in the world. So I think they will have significant success outside of China, depending on what kind of tariffs or trade barriers are established. Frankly, I think if there are not trade barriers established, they will pretty much demolish most other car companies in the world. So they're extremely good.
Take a look at shares of Tesla. Again, under pressure, now trading under $200 for the first time in a long time, Brian. I haven't looked the last time that they were trading under $200. But the bottom line is this, when you look at Tesla, yes, the energy storage business is growing. But this question of the Chinese automakers, it's not just with EVs. Yes, they are growing quickly in EVs, but it's all vehicles, internal combustion engine vehicles, as well as electric vehicles. We have talked about it at...
What? You got to feel for Phil. The poor guy's been covering the automotive industry in the finance media now for, easily over a decade, probably a decade and a half, maybe longer. Is he just suggesting that Chinese-made internal combustion engine vehicles are going to be around for a while? And either way, it is true. The Chinese EV makers are going to utterly gut the legacy automotive industry globally. While the dipshits leading and or making decisions and or slowing and or steering directly towards an iceberg at companies like VW, Toyota, Government Motors and so on were making every possible misstep, not seeing what was coming, Chinese EV manufacturers have been aggressively ramping production, driving costs down, learning, iterating. Admittedly, very few of them make any meaningful money selling electric vehicles yet. But consumers don't care. If they can buy a well-priced, pretty decent electric vehicle, doesn't really matter who's producing it. And at this point in time, the only companies selling well-priced and or reasonable value electric vehicles are Tesla and Chinese EV makers. Musk is absolutely on point. Unless there are outrageous obstacles to the importation into certain countries of Chinese-made electric vehicles that make them financially impossible to sell to consumers at volume, the Chinese EV invasion is going to be brutal for legacy auto companies. And call me crazy, but I personally believe that if companies suck shit and they get disrupted by companies that don't suck shit, good. It's not fun for the workers who lose a job because they are at a company that's been disrupted, but them's the breaks.
For months, we were over in Europe showing the growth of Chinese automakers over there. They are coming and coming on strong. Now, whether or not you can say, well, that's the reason Tesla is not giving guidance for next year, that's too much to say. The bottom line is this. Tesla is facing a slower EV market worldwide, and...
That's right, ladies and gentlemen. Late January 2024, more claims in the finance media around slowing EV demand.
And they are trying to transition to this newer, lower-cost next-generation vehicle that they, at this point, Brian, are projecting to begin production on in the second half of 2025.
And now worlds collide. Tasha Kenny of Ark Invest and Dan Ives on Yahoo Finance.
Look, you need communication. What the margin guidance is ultimately going to be, how many more price cuts. And I think that's the frustration. At a time that investors need adults in the room, it felt more like preschool. And I think that...
What the hell? Why has this post just appeared on my screen again? From this guy who says that we, as in analysts, all need to grow up and do their own research. I thought, was something about an adult in the room or a lack thereof? Pot kettle black? I'm kind of confused here. What's going on? I'm sure there's no connection between this post and these comments. Sorry, don't even know why I brought it up. Back to you, Dan. Tell us more about Tesla needing an adult in the room to spoon feed you. By the way, it's actually pretty funny. I don't want to single Dan out too much here, but I'm just getting images now of an adult. The baby, open the mouth. Here comes the airplane. Open up, open wide. Here it comes. Oh, there we go. Good boy. Good boy. You're such a good boy. Now, Dan, if you're watching, don't get mad, bro. I mean, this was just too good of a layup to ignore, right? Gary Black calling out analysts wanting to be spoon-fed. Then the comments about it felt like preschool. And then we have a literal preschool-aged child being spoon-fed. I mean, it was too good not to.
That was a conference call. You're going to see pressure on the stock. The long-term story doesn't change. And Tasha, I'm sure you'll agree. But in the near term, the bears win.
I'll put this question to both of you, Dan, just because you brought this up a moment ago and we mentioned this in the intro. Is it as simple as interest rates not being in Tesla's favor, or is there something else at play within the broader EV demand landscape? I'll go to you, Dan, first, and then I'll get your thoughts, Tasha.
Look, demand overall has actually been pretty strong relative to, if you think about how bad it could have been, 35% plus growth, call it 18, 20% this year for 24. The reason the stock's down, it's because of margins. And I think 80% of the reason the stock's down is communication, 20% results.
This may be true. For what it's worth, I care only about results and not at all about communication. In fact, if I'm being honest, I would prefer worse communication from Tesla, causing more derps and dullards to panic so I can continue buying Tesla stock at the best possible price based on results. But that's just me.
Tasha, I want to get your thoughts on that as well. And I'll layer on perhaps this additive, a new model. Is that really going to spur demand the way that some investors were hoping for or might have anticipated?
Wait. Now, look, I know he's just trying to make conversation, but there's only one possible way to answer this question. A significantly more affordable vehicle model. What are the odds that if it's significantly more affordable, more consumers can afford it, wait for it, and therefore can, and wait for it, will buy it? I think the odds are about 100%. Am I right?
Yeah, well, I think, Dan said it, right? I think that the focus should be on the long term here. And a lot of investors currently right now are focused on the short term. Hey, look, Tesla's not immune to changes in interest rates, right? But when you look at the auto industry as a whole, they are, one of the only electric vehicle manufacturers that has this profitability. And we heard on the call that they're able to reduce costs at really an unprecedented rate, when analysts think it's over 10% a year. And they said they see further opportunity for cost reduction. So, they've cemented their lead in electric vehicles. I think if you want to talk about the next year or so, we should be talking about robo-taxis, right? We heard that full self-driving version 12, their latest version of autonomous driving software, is going to roll out to more customers in North America soon. I think that shows confidence in their autonomous capability.
This is definitely true. Now, it's important to understand FSD V12 was a complete redo, built from the ground up, trained end-to-end on video. We first saw this demoed when Elon did a drive and live streamed it on X months ago. Between now and then, Tesla's obviously reached a point where they're confident enough in its capabilities that it's give or take equivalent to the prior software with 300,000 plus lines of code, a bunch of rules completely deleted from V12. They're now confident enough in its capabilities that they're willing to roll it out widely. This is a very big moment. Tesla wouldn't start pushing V12 software on FSD out to customers, to the public, if they weren't confident in its capabilities and safety. Now, this doesn't mean it won't make mistakes. It just means it's not a complete and utter clusterfuck that's ultra dangerous. I think it's fair to say that in the span of roughly a year or less, Tesla has, from the ground up, basically starting from scratch, but utilizing their existing data for video training, gone down an alternate path that's already approximately met, possibly even exceeded, the capabilities of the previous version with a bunch of rules, heuristics that took the better part of half a decade or so. Think about that. Now, obviously, that doesn't tell us anything about the future progress, but if Tesla, in essence, in really rough numbers, has achieved in 1 year what it previously took 5 years with a very different approach, is it possible that the rate of progress into the future may be a little bit faster than people were anticipating, given the historical progress? Worth pondering.
And as you know, we think that's a multi-trillion-dollar opportunity. We also heard that Optimus might ship next year. General purpose robots for manufacturing alone, we think could be a $10 trillion market as a whole. So we're really excited for those AI opportunities. This is one of the greatest AI stories of our time.
But they didn't provide any guidance. I've got an empty cell in my spreadsheet, Tasha. You don't understand. I'm going to get fired. I need a number.
And Tasha, you've been a long-term bull here on Tesla. But Dan, let's talk about what is going to happen here over the next 1 or 2 years, because 2024, it looks like from the commentary there, it's going to set up to be a very challenging year, or a challenging year, I should say, for Tesla. Is 2025, is that going to look much better?
Look, and I think, Tasha, we agree 100% from an AI perspective. That could be multiples of what the stock's worth today from an EV opportunity. But 2024, you need to hold the line on margin. You cannot continue to cut prices.
So again, just a quick note in case we missed it. Tesla's gross automotive margins did actually increase meaningfully quarter over quarter, which many thought was causing a lot of concern among investors. But if margins are trending higher, we've seen cost of goods coming lower and Tesla mentioning that they can continue to drive costs down even without the next-gen vehicle platform, I wouldn't be particularly concerned about this. Now, obviously, the big variable is interest rates. And again, I don't know what's going to happen, but my best guess is they're probably not going higher and they probably will start coming down. And if they start coming down, I mean, Musk himself pointed out on the earnings call, if rates come down, margins probably go up. So what are the odds that rates come down? And exactly how much might they come down?
I think if this is a trough period, next few quarters, then this is the low. But it comes down to the communication because investors want to hear guidance.
Now, it's true. Actually, it's not. I'm not sure I'd call them investors. Poussoirs want guidance, so they don't have to do any thinking themselves. But if you're not doing thinking for yourself, are you really an investor? I kind of think that the two they go hand in hand. Because why are you investing if you're not thinking and thinking about fundamental things? It is very easy to just sit there with your mouth open and believe what you're spoon-fed. PS, what laptop? Safe and effective. What my car? Wait, what? So I think what I was trying to say is it is certainly easy to just be an NPC, but who said investing was easy? I mean, you really do need to think about this stuff. And the result of having thought about this stuff often is that you'll have a level of confidence in the future such that when the winds of fear and panic start buffeting you, instead of blowing off into the wind like a plastic bag, panic selling at the worst possible time, because you think the world's ending because you didn't do any thinking, you think, oh, okay, I've already thought through this scenario. No sweat, I'll hold strong.
Sort of navigate this period. When the plane's crashing in the near term, you're not focused on salted or unsalted pretzel.
You know, Tasha, when we think about what other auto manufacturers are doing as well right now, I mean, the scale has been there for years. Tesla has obviously been able to ramp up over these past few years, specifically in EVs. A lot of these other manufacturers have had to either pivot some of their ambitions or at least draw back, but they still have considerable scale that Tesla perhaps can't turn on the same way. You know, how are some of the other manufacturers, Ford, Stellantis, GM, how's what they're doing perhaps one of the larger kind of clouds that continues to loom over Tesla and the larger demand environment as well?
Well, Brad, you said it. Those traditional auto manufacturers are actually pulling back their electrical vehicle plans. And it's, again, because they don't have the lead that Tesla has. They don't have the cost structure that Tesla has. So yes, they have scale, but not in electric vehicles, right? Some of the Chinese automakers have scale in electric vehicles. But when you look at North America, you know, Tesla's been the lead for a long time. And by the way, it's not just about cars, right? It's about AI. It's about compute. And Tesla is years ahead of the competition there. I mean, what they're building out in terms of AI compute is going to rival many tech companies, let alone automakers. Automakers aren't even close.
Tasha spit in some facts here. I don't even know where to begin. The narrative that the competition is coming for the last 15 years was entirely based on electric vehicles and ignoring the next few phases of Tesla's growth relating to AI, robotics, and autonomy. By the way, just out of interest, as we can see on screen now with these disclosures, Tasha personally owns Tesla stock. The reason that I point this out is often the folks you'll hear discussing Tesla stock don't, which suggests that Tasha Keeney is at least putting some of her money where her mouth is.
And you cannot talk about Tesla without talking about this robotics opportunity. And so to give you an example, right, Tesla has millions of cars on the road. They're able to access data from over 2 million miles of full self-driving behavior from customers per day. No other automaker can pull that information off of their customer cars. I mean,
wait, what's going on? Why is this on my screen again? The Tesla's $500 million Super Bowl investment, dojo investment. Why would they be spending money on training compute? It's not like they have an unassailable data lead, because Tasha doesn't know what she's talking about. The reason I say this is because Craig Irwin told me that Tesla's just a car company and that they don't have anything that Toyota doesn't already have. So obviously Tasha's wrong. What AI? What data? What fleet of vehicles?
I mean, this is unprecedented, right? So when you think about solving for autonomy, which is the future of the auto market, and if you're not there, I don't even know if you can survive.
Did she just suggest that the vast majority of automotive manufacturers are completely and utterly fucked? And I think that's what she said, although slightly more politely and in less absolute terms, which kind of comes with the territory when you happen to work for a company that manages money, as opposed to being some dickhead who just creates content on the interwebs. But I'm pretty sure she just said that if you don't have autonomy, you are fucked. But obviously, she's probably wrong. After all, Tesla, just a car company.
The next 5 years, 10 years. So I think that's where Tesla has this lead. And I think that we see videos of these vehicles where people don't have to intervene and it's full drives, right? So it's already possible in specific scenarios, California locations. I think that they could launch a ride-hail robotaxi service a lot sooner than people expect. And then, the margin fear is over, right? Because it totally changes the business model. This is going to be a lot more profitable than their base vehicle business.
Tasha coming in hard with the facts again. Just every time, bro. The conversation around margins and the panic, it's just a couple of years from now, people are going to look back and go, what the fuck was wrong with you, bro? You seriously, why were you concerned about that when this was around the corner? In my personal and overconfident opinion, it is not a matter of if, but when Tesla launches their robotaxi service, has solved autonomy to human level and then beyond safety and just gets safer from there. And I believe this will occur a lot sooner than most people are expecting. And when it does, I would prefer to have been one of the people who, wait for it, we're coming full circle here, did the thinking for themselves rather than needing to be spoon-fed. And in this particular case, the way that Wall Street expects to be spoon-fed is to wait until after Tesla solves autonomy and after the first robotaxi revenue comes in and after they can then stick the revenue that's already come in from robotaxis because autonomy solved into their spreadsheet. At which point, the business model will have shifted, as Tasha points out, and possibly the opportunity may have been recognised more widely by investors than it currently is. I'll just leave it there. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. It's an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point and something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy. Wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.